Time for another stock review. This time we're going to look at ACHR, Archer Aviation. This is a full review I do for my members. We're going to look at the back test. We're going to see how it compares to the S&P over time, investing $10,000. We're going to look at Wall Street's price targets. We're going to look at whether there's any inside trading. Anybody that works the company has bought or sold the stock. We're going to look at the intrinsic value, the balance sheet, the debt they hold, a full deep dive into the stock, whether you should invest in this stock at all. Now, if you like the software that I'm using, we've got very advanced algorithmic software. Algorithmic software, is that a real word? I don't know. Anyway, we use very high advanced software. If you'd like it, I have a referral link, which I will give you at the end, and all my members can get a 10% discount, which basically gives my membership for free. You can set up a free account using this software, which will give you a couple of reviews. You can see on a couple of your favorite stocks, but if you want more, then you can go premium. But if you do that with my referral, my membership becomes free. It's a fantastic offer, and I'm the only person on planet Earth who offers you that deal to probably the best valuation software on the internet right now. And in fact, we do our own reviews on there as well. It's called Alpha. I will bring that information later on. But first of all, let's get straight into the review. If you are new here, click subscribe and ring the bell, and do smash the like. Now, if you would, as I make this video, I'm making it in a live video. I actually make all my videos unedited as they are. They come straight out. So this is real as it happens. If anyone does a comment, and my members can do a comment right now, or you can do a martynlucas.com/tip, you can do a comment. It will read it out on the screen, your thoughts towards Archer Aviation as it's being made. So if that does happen, you'll know why. All right, let's get straight into the stock. We're going to start very, very simple first of all. This is my position here at the moment, you can see, and I'm going to start with some basic information, how you'll see the stock appear. We'll go through this chart over here. We will also look at the full website of the company. We'll go look down and scroll through what the website looks like. We'll also go and do a complete back test on the stock compared to the S&P 500. We will also share you some in-depth reports from Alpha using our fundamental analysis, the balance sheet, the efficiency of the company. We'll go into all of this, who's buying, who's not, and you'll learn a lot about the stock over the next 10 minutes or so. So please watch through to the end if you want to know if Archer Aviation is worth an investment. When I invest, and I typically consistently beat the market, consistently beat Warren Buffett. You've seen me do that on my shows live every day. I am a value investor. I don't buy when the stock goes up. I buy when it goes down. If it's undervalued, it's unique, proprietary, got something unique about it. It's got a good balance sheet, a good run. It's not going to have any issues with solvency, a good balance sheet. And that's how I invest. So I'm looking for great companies. I don't buy stocks. I buy companies at the best prices when they're beaten up, when they're down, when they have great potential. At the same time, it's a balanced portfolio with discipline and structure. There is no emotion here. It is purely numbers, facts, relationships, speaking to people, and finding great businesses, not low price stocks. That's not what we do. So without further ado, Archer Aviation. Let's start basic and let's get more detailed as we go. What is Archer Aviation? Engages in the development of electrical vehicle takeoff and landing aircraft. The company was founded by Brett Adcock. Is that Adcock? I beg your pardon. Yes, Adcock and Adam Goldstein on October the 16th, 2018, headquartered in California. Adam Goldstein is the CEO, 483 employees, a small company. So we're looking at an electric vehicle takeoff. So basically a flying car, flying taxi. That's what we're looking at. Certainly an innovative stock. I like this technology. Straight off the bat, I will tell you, this is the kind of thing that I am interested in if it's at the right price at the right time. Let's have a look at the margin requirements. If you're buying it on margin, 50%, 25% low risk, 100% is the highest it goes to. Maximum risk, it's somewhere in the middle. So it's risky, but not dramatically risky from a valuation point of a margin being placed upon, a margin call being placed upon you. Market cap 1.4 billion, small company. It's losing money. $2.94 is the price earnings ratio, the price you're paying right now compared to what you're going to earn. So it's losing money. No dividend. This is a growth stock. Have we hit the S curve yet? We'll talk about that shortly. Average volume 4.82, today's volume 4.78. I'm making this at the announcement that we've just seen inflation dropping like a stone and we're going to get an interest rate cut in the spring or the summer. No earlier than that. It will stay high till then, but we are heading for a rate cut. So it is up today. We are getting volume today because of what's going on in the market. High today, 594. 52-week low for high, 749. Volatile stock. Okay. Analyst, this is the basic analyst review being done. We're going to go into it in much more detail in a few moments. This is just starting off light and we'll get deeper as we go into the video. Okay, this is Morningstar, okay, and this is out of date, remember, this is not updated daily, so don't go on this one too much. They are saying it's a strong buy, good. Let's look at the recent earnings. As you can see, expectations are always being missed. Remember, expectations are not set by the company; they're set by Wall Street. Wall Street are investors; they are traders. They don't look at the future of a stock. They're not kind of guessing to the future. They're not making predictions. They don't look at the stock like that. They look at it on the day-to-day trading of it. And that's why they can't value Tesla very well. They can't look at robotaxis. They can't look at Optimus. They can't look at Dojo because all these things don't make money yet. So they don't even count it in their valuation. So they're not very good at valuing companies that have future, really into the future potential. It's not for them to do that. So they've given these valuations and they've missed it, or at least the company have missed it. But I don't take valuations from Wall Street too seriously when it comes to a company like this. As you can see, they've missed on the expectations consistently until Q3 of 23, and they beat it. They were expecting to lose 30 cents a share. They actually lost 19 cents a share. Better, massive improvement, going in the right direction, however, still losing money. We don't like buying companies that lose money, but of course, an innovative company like this is always going to lose money at the beginning. It's spending a lot of money, innovating, building out the business. It's bound to lose money at the beginning. This next metric, again, still simple. We'll go in more detail in a moment. Joby Aviation is a company that other investors of Archer are buying. That's important to see because we can see the type of people that trade the stock. That's important because you learn the sentiment of the stock if you look at that, all right? Joby Aviation, similar industry, of course. Lilium NV, Ginkgo Bioworks, very volatile, risky stocks. Astra, rubbish. Don't like Astra at all. I'm in Rocket Lab, much better. And I'm also in Virgin Galactic, of course. So there's some very volatile stocks. A lot of gamblers here. Lucid, very aggressive gamblers, loses the CEO, Peter Rawlinson, pays himself $500 million a year, driving the company to go private. That's a worry. That's the sort of people that buy this stock. Don't like it. That's bad. That's a negative on this stock so far. Okay, let's have a look at it over the maximum. Again, just basic information so far. We IPO'd here, and back in 2020, COVID, everything was popping on IPOs. That doesn't happen so much anymore. We've moved away from that kind of particular climate. We're not in that climate anymore. It may come again next year, of course, as we head into a new bull market with interest rates coming down and free money starts to come with the printer being turned back on again. Anyway, so it popped, fell away, went sideways for a while, came back down, it's been going sideways, and now we're getting some growth as we're starting to beat on earnings. Okay, let's look over the last 3 months, the quarter. We're up 2% over the last quarter, and today we're up 13%. Anything today is up that has certain amount of debt where they think rates will come down. They are now getting a big boost. undersold, shorted stocks, all this kind of stock can rally today. They're all going to be way ahead of the S&P. Of course, that's just the way it is. On a green day, stocks like this, high growth, that are oversold, that are down, are going to accelerate. But that doesn't mean to say we should buy it. I like buying stocks when they're going down, not when they're going up. It's not what I do. It's not how I invest at all. Never done that. All right, let's now go into some more detail with Archer Aviation. Next thing I like to do is presentation. As you can see from my studio, I'm all about presentation. Presentation is everything. I am talking to my audience, building up credibility, that I take myself seriously, that I take you seriously, that I spend a lot of time and effort in my own presentation and my studio, and everything else is important. As a publicly traded company, it's very, very important for a company to present itself to the investor as a serious company, right? So let's look at their website. It's important. If they don't invest on their website and it looks cheap and rubbish, I don't touch it. I set a high standard. I'm super critical. I'm not here to make friends at all. I'm here to be the most honest channel on YouTube TV. So if they don't like what I say, I don't care. I'm not here to do that. I'm here to make money, invest. Let's look at their website. This is what they're about. Purpose-built, proprietary. Proprietary is always a great word I'm looking for. Unique, something different. Apple is proprietary. Does something that no one else does. We like that. Newark Airport to New York City in 10 minutes. Okay, very good. Let's look at the aircraft. Midnight. Let's have a little look at the product. Okay, the website's okay. So far, I'm giving it 5 out of 10. Nothing great. The technology is a bit old, but it's okay. 5 out of 10 I'll give this website. It's not rubbish. It's not amazing. Doesn't blow me away, but it's interesting. Okay. It's important. Some of you are going, why is this important? It is important. The mission. What's the mission? Okay, let's have a look at the mission. We set ambitious goals. We make data-driven decisions, hold ourselves and each other accountable, and are committed to relentless execution. Let's look at the partnerships, who they're partnered with. United Airlines, Stellantis, okay. Our flagship customer, Archer United Airlines. Electric flight is coming. We like all of this. Electric flight. Very, very nice. Very exciting. Teaming up with United, of course. I don't like investing in airlines other than, I guess, Virgin Galactic, because space is at the very beginning of its journey, whereas airlines, of course, they've hit their S-curve years ago. Moving to electric planes, of course, a new S-curve, potentially, but they already have the customers. Just because you then change everything to electric doesn't mean to say, if you did that, doesn't mean to say that the company is going to explode, because you've already got the customers. They just change vehicles. Doesn't necessarily mean they're going to see an improvement in the share price, does it? They might cut costs, but they would have to spend a lot of money to move to electric. Anyway, let's now go into some more detail with Archer Aviation, and let's do some real deep dive on the stock. I gave you a little glimpse earlier. You had a chance to pause it and have a quick look. So let's go straight into it. Here we go. So first of all, looking at the best case scenario, it's massively overvalued. It's losing money, this company. Best case scenario, if the world was perfect and inflation was low and everybody was doing everything as we want it to, it's overvalued. The company is losing money. Base case scenario, no, not good. Worst case scenario. Now, there's very limited information here, and I need to warn people. When we run it through our software to get the intrinsic value, we need certain metrics, and if they're not available from the company, then we can't always get an accurate stock valuation. And in this case, it's one of those. You can have two things. Everything go great and we have all the information and we get an accurate valuation where I can make an informed investment decision. Then we can get an undervaluation trap where it looks really cheap, but actually it's not if you dive deeper. Or we can get this warning. And the warning we're getting here is intrinsic value estimate is unreliable because it's based only on its DCF value and doesn't have the use of relative valuation using multiples. Now, why that's important is There are many opportunities on the market. All we're doing is try to find out, is this the best use of our money? We're not trying to find out as if it's a great company or not. Is it the best use of my money? That's what's important, because there are other opportunities. Soon as I see anything like that, I'm out. Won't buy it. I know that's different because Virgin Galactic has some metrics missing. That's very different. I have relationships with the people on the ground. I know more about the company. I have a deeper relationship with the company. I know what I'm buying. Here, I don't yet. First time I'm looking at it. Hiya, Mike Kemper. Welcome to the show. Here, I don't. So I have to look at numbers. So I'm out. I'm walking away, because at the end of the day, there is not enough information for me to make an informed decision. If I'm buying it now, I'm buying it purely gambling. I don't know enough information. Algorithms, technology is there to give me information, and information is power. If I then decide to ignore that information, that is crazy. I can find something else which can give me a good return without taking the risk. Keep your emotions out of it. Don't just jump on in because it sounds sexy and rock and roll. When this information becomes available, I will then reassess it. If I miss it, so what? There are other companies I can look at. Let's scroll down. Revenue, not applicable. As you can see, there's information missing here from the financials. Operating income is down 495.3 million, down 26%. The net income, 483.6 million, down. Operating cash flow, 238. Down. This company is got some serious issues with its numbers, with its financial fundamentals. The balance sheet. Let's have a look at the balance sheet. Has 482 million of assets, 205 million of liabilities. That's okay. The balance sheet is okay. What we don't want to see, as we saw this morning with Home Depot, is when you're very close, your liabilities are chasing your assets. We don't want that. We want some distance, and we do have some distance here. But if we look at the liabilities, we can see that we've got accounts payable, 14.6 million, accrued liabilities, 137 million, other current liabilities, 6.5 million. The balance sheet isn't too bad. Let's scroll down. We are missing information, as we can see. Efficiency of the company, because they're not making any money right now. There's nothing really to report here. It doesn't give us enough information, and we have all the software ready to go. If the numbers aren't available, if we're not achieving certain goals from the company, we can't plug those into the system. We can't tell ourselves whether it's worth buying or not. Simple as that. Look, the profitability score, 27. We've hardly seen it lower. It's a bright red. They're not making money. Profitability score is hardly ever any lower than this. Negative cash flow, negative operating income, negative net income, negative RO, return of equity, all bad, all not good, no profit here. Do you want to chase a stock when it's like this? No, you want to wait. If you're buying it now, you're buying it because you know something at the company that we don't know. You're buying it because you're a gambler. That's not how I invest. Solvency score, 57. That's okay. We want to see green. We don't want to see red. It's 57. Low DE, high Altman score, short-term solvency, long-term solvency. It's not going bust. We saw the balance sheet. It's not going bust anytime soon. However, it's making no money. This could easily come down. This solvency score could dramatically turn red very, very quickly. However, it's not bad. It's not going bust. You can take a punt on it if you are a gambling type of investor. I am not. If we look at the forecast, as you can see from Wall Street, 115% if everything is great. It's not great. If everything's average, 49%. Lowest is downside, 22%. So you look at that alone and you can go, you could just buy the S&P with no risk, really, a dividend reinvesting, and you could do probably better than you can here. Doesn't mean to say it doesn't grow into the stock. Okay, let's move down. This is interesting. Very interesting. October the 16th, very, very recent. This is the most important piece of data I'm able to present to you now. The most valuable piece of the puzzle so far is this. On October the 16th, Stellantis, a 10% owner, bought $104 million worth of shares. That is huge news. October the 16th, an institution, a partner, another business bought in $140 million worth of shares on October the 16th. That's very bullish, very, very good. Wrong time for me to buy it. I would have liked to have done my research before and bought before they did that, hence why I do these reviews so you can see all the information here. They just bought in, the stock's gone up, it's rallied on that, as we've seen recently, it's up 14% today. Not enough information for me to buy the stock, I've got to be honest with you, it's overvalued at the moment, we believe, from what we have, and it's had a recent major buy-in from a partner. That's really good, really good. However, you're chasing that news. I would have rather bought it before. So what I'd be like to see now is a drop, but then buy in, even though I'm still missing that information, which I'd like. So it's not one for me. That's good. That's very bullish. That's good to see. But nevertheless, it's not a go from me. And we'll look now at the sentiment. This is important, the sentiment. Over the last 90 days, we can see that a lot of neutral news. Negativity is around about 5.9%. Over the last 30 days, negative news has reduced to 4.6. Last 7 days, it's 5.6, much more positive news. And today, all good news. This is good. I like it. A lot of good sentiment. So we've got good sentiment. We've got a great innovative product. We've got insiders buying from partners, big buy-ins. We've got good upside if things go well. However, profitability isn't there, but it wouldn't be yet because we're spending money. Solvency's not going bankrupt anytime soon. Balance sheet is pretty good. I do like it. It's the sort of stock that I would like, but we're just missing some of these metrics. And it's not we don't have it, or we haven't plugged it in. It's just not currently available. So there we go. Now then, lastly, we'd like to compare. It's very, very important to compare to the S&P, because if we're going to make an investment, we have to compare it to something or something else. And as we can see, it's quite easy to see. If in 2021, and that's as far back as we can go, if we put 10 grand in the aviation, we'd be down to 4,722. We'd lost half our money. Would be up to $11,000 at a $10,000 investment on the S&P 500. You can see aviation is in blue and Archer and Vanguard S&P is in red. We can see that. Okay, so there we go. There is my review this morning for Archer Aviation. So I will give my assessment of it. It's a sort of stock that I believe in. It's definitely for the future. It's definitely the sort of stock I want to be involved in. It's got some good partners with good money behind it. We've seen a good amount of inside buying recently. Very, very nice indeed. Its balance sheet is giving it a good run. It's not going to run out of money anytime soon. Its profit is as low. Well, that's bound to be. They're spending a lot of money. It could be one. I don't like its pump today because I don't buy stocks when they pump. That's not what I do. There is some information missing. I think there's potentially better opportunities on the market, but it's certainly one of interest. If it dropped today, if we got a bit of a drop today, and we could get in at a lower price, I might be prepared to take an entry on it. And I will give you a very important metric too. I've just pulled up. The percentage of shares shorted is 18.85. It has some short interest on it, but that isn't too dramatic. It is way more than Apple or anything like that, Amazon or whatever, but there is a certain amount of short interest. It's not going to short squeeze at this level. We need more volume and we need a higher a percentage of short interest. However, though, it's interesting. I'd like to keep my eye on it. I'd like to buy it on a drop, but I am looking for more information because I'm not just buying everything because it's sexy and rock and roll. I am not that kind of investor. Click above my head if you want to see what I'm buying before I buy it. All the links are above my head and below in the description. You can see my X account where I post what I'm buying before and I sell before I sell. If you want my link, my referral link to Alpha, which is what I use, you can get that. All members get a 10% discount, which gives you the lowest price that anyone can get anywhere. My referral link's over there. If you want more information on Archer and other relevant videos, they'll be over here in this section here. That's it. You too can book a full review with me. Members get it for free, and I'm happy to do it for any of my members. Until next time, as always, take care of yourselves and each other.